You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. Once again, it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. You guys know where to go to get more access, more content on top of what you're already getting every day there on the network, theoptionsinsider.com/pro. Exclusive shows like Options Oddities coming up a little bit later today, as well as pro Q&As. The big giveaway, it's July, so we have to look back and do the giveaway soon. I think probably next week we'll get it all set up for the big giveaway for the June Options Insider Pro Trading Crate. So you want to get your name in that hat. So get in there, theoptionsinsider.com/pro is the place to go to begin that journey. Let me apologize last week as well. We had a bit of a last minute schedule change. So of course there was no Volatility Views last week. Believe me, I would have much rather have been here doing the show. But alas, unexpected things arose that took me away from the microphone last week. But we're back here this week, raring to go. Got a great crew joining me this week, including, let's go first to the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Hey, Mark, glad to be here. Excited to be here. Interesting day in the markets in that it's boring, which is new and exciting.
Yeah, a nice refreshing change of pace. We are heading into that holiday weekend yet again, another holiday weekend here. So, yeah, markets, probably a lot of people already heading out of town and taking their paper with them. But you know who didn't head out of town? He waited to do the show. We had to bump him from last week, but we got him back again this week. He is the flow master himself, a.k.a. Mr. Henry Schwartz, a.k.a. I don't know what your title is over there at SIBO now, sir. You have a very long and complicated title over there.
No, that's not good. I'm the head of market intelligence in the data and access group within SIBO Global Markets. So it's not that long.
There we go. I knew it was something along those lines.
and I'm still the flow master.
You'll always be the flow master to us, sir. as we keep on rolling, it is time to commence the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity perspective. And coming into the start of the show, as Mr. Meatball mentioned, it's kind of a heck of a lot of not much, quite frankly. We are seeing some red on the screen again, ever so slightly, nothing compared to the aggressive sell-offs we've seen in recent market sessions. Today, the S&P off about 1/3%, Dow off about 1/4%, and NASDAQ off about 0.6%. Weirdly enough, obviously, we were off for last week, so going back to 2 weeks, almost all of the vol products were quite literally unched when we kicked off the show today. That's very rare, especially for that long of a period of time. 2 weeks to come in to the show, and it's like nothing has changed. Spikes when we kicked off the show was 27.5. That is literally exactly where it was when we kicked off the show 2 weeks ago. A VIX cash, 27.5 as well. Same deal, unched from where it was 2 weeks ago. So yeah, that's a bit of a rarity in the vol space in and of itself. You know, if you've been listening to this show for a while, trading vol for a while, you wait 5 minutes and vol's going to go somewhere. And the fact that we're pretty much at exactly the same levels as 2 weeks ago is a bit of a rarity. But let's go out here. VVIX, the vol of vol, continuing to trend lower. No surprise, we are seeing a bit of a quiet session heading into a longer holiday session. So not a longer holiday weekend, I should say. So not a lot of vol to be expected. VVIX reflecting that, down 5 points to about 88. So again, back below that magical triple digits level. The Viking, aka VSpikes, so another measure of vol, was at about a 109 when we kicked off the show. That's down 12 points from where it was a couple of weeks ago, but also rebounding off a new all-time low for the product, which it set just a couple of days ago, June 28th. It hit 103.63. That's the lowest it's ever been since the product launched last year. So we were seeing record lows in VSpikes just a couple of sessions ago. So all that leading up to the fact that we're not seeing a heck of a lot of vol on the screen heading into the weekend, which again should come as no surprise. Let's go around the horn. Let's start, because we had to bump him so rudely from last week. Let's start in the MIAX hot seat this week. Mr. Flowmaster, sir. A lot to unpack in these markets, sir. What is lighting up your tape this week?
I mean, you're right. It's funny that things really have calmed down, and it's an interesting time because, you know, volatility, you know, we got up there, right? We got up, you know, above 30%, and it was, you know, everybody was, you know, there wasn't any panic, but, you know, vols in the low 30s definitely makes people very, very nervous. But then, you know, things have quieted down. The market hasn't quite bounced. We had a couple up days, and then, you know, what you see now is we've had a couple kind of flat days, you know, and like Mark Sebastian said, it's just a little bit boring. You know, you're going into a 3-day weekend, and I think probably, you know, 25% of the industry is on vacation already. So there's not a ton going on, but you know, for what I look at, it's been a very notable shift, you know, over the last couple of months from, you know, the single stock options and you know, a lot of that kind of speculative meme type of stuff back into things that are a little bit more traditional, right? The pendulum came on back, and so what we've seen is, you know, heavy index volume and heavy ETF volume, and single stock volume has really dried up as I think a big portion of the trading community, especially the retail trading community, is kind of trying to reassess what's going to work for them.
So you've been watching all the flow for these last few months, sir, and including in the vol space. Anything really crazy stand out to you? You were watching it come across your tape at Trade Alert and saying, that's crazy, that's unexpected. Any interesting trends or developments along those lines, sir?
I mean, what was most interesting to me was, you know, there's an assumption that as we sell off volatility, implied vol is going to pick up, right? And you're going to start to get some dislocations and some panic. And we didn't see that. We didn't even see that on some of these days where the market was down 2%. So it's funny. It's not so much a matter of seeing, a couple really big specific trades or points of order flow that we can point to, as it is the way the order flow and the way the markets have behaved. It's been, you haven't had the panic. You haven't had, you actually have some people complaining that their hedges aren't getting them as much of a bang for their buck, because people that are long puts into a market sell-off, obviously the strike of the put, the fundamental purpose is going to provide value, but people usually get a boost in implied vol too, right? So you get kind of the double whammy, and that hasn't happened it really hasn't happened this year, and so that's a little different from historically what we've seen, where market sells off 2% and you know that VIX is going to be up 2 points kind of thing. That connection is not as strong as it's been. I don't know. Mark Sebastian's probably seen the same thing.
Mr. Meatball, then I shall toss it to you, sir. What is lighting up your tape, and what are your thoughts on what Henry was just laying down, sir?
Yeah, he's right. This is starting to look a lot like the first half of 2002, where we saw the market really decline nearly 20%, and yet VIX never really took off. At the very end of that selling, we finally saw people get worried, and vol, when the S&P finally broke, I want to say into the 900s, we finally saw some panic, and VIX make a run at 45-ish. And we might be in that same situation where the real volatility in the market is not on the sell-offs, but on the rallies. And we have a VIX that hangs around 30 because the market is moving that much, but doesn't get a giant lift until we get some sort of panic and break some sort of major level. Maybe that's in somewhere around, at least 10% lower than here, where people start to worry. That's kind of my best guess. Maybe Apple starting to really soften up is something that takes out the market, but we are not seeing any real panic in this market as we sell off. It again really looks a lot like post September 11th, the stock market. So for the little history, the day after September 11th, when markets finally opened, I believe that was the 14th, vol popped, the market dropped, we got a little V bounce, and then the market began to slowly, grindingly sell off over the course of 10 months, finally turning around when sometime in, I want to say August, July was when we saw some major selling. And over that, call it a 10-month period, the market gave away 25% of its value, but VIX never really took off. And then at the very end, we got that pop. So that's kind of what it looks like. Henry, you were on the floor. You were one of you were a Taz, not a Taz Ranger. What did they call that? What were you? You were one of those people that crushed people on AutoX.
A raise bandit.
He was a raise bandit.
You were a raise bandit, yeah. And you were a raise bandit back then. Do you kind of remember that period? And what do you think? Does it kind of feel the same way?
I was a raise bandit, and it was kind of funny, and it involved a lot of phone calls to Fidelity, where you have to beg and scream and get them to get you what you were supposed to get, because it wasn't quite always the true electronic execution. I agree. It's like I said, it's been an orderly decline, and I've some of the people I listen to, some of the good strategists kind of look at that and kind of use that as a reason why maybe we haven't really seen the bottom. I'm more optimistic than that, but the fact that we can have back to back 2% sell-offs, and fine, VIX gets up into the 30s and everybody gets pretty depressed, but you don't have the dislocation, you don't have the kind of the markets blowing out. I guess it either means a lot of people are just kind of holding their breath, or maybe the liquidity is just solid, and at least we're coming. The one thing that I think is keeping people from really losing their mind is we're coming out of such a strong bull run that unless you unfortunately bought in huge in January, you may still be sitting on profits from 6 months ago. So I think that's part of it. It's definitely an interesting time. It's to me, what's I think probably the most interesting is that the market shifted in January, and obviously with the change in the Fed, and we went from strong bull to a lot of people predicting recession and everything else that you're hearing about now.
Well, Mr. Henry, allow me, on behalf of all the victims of the Raise Bandits, to thank you for the 100 lots of 100 Delta Intel calls I had to choke down that were $2 away from the money by the time I got it on my screen. So thank you for that. A gift that just kept on giving out there, sir. But Mr. Meatball, it sounds like you're saying you think they really need to start killing the darlings. They need to come for the Apples and all the other popular names. Do you think that's really going to be the catalyst that could kick us into another gear lower?
Yeah, I think that's what it's going to take, because Apple's still really, really sturdy and pretty stubborn. So yeah, when Apple goes, the market goes. I think when you talk about PE contraction, which is what we've been seeing, Apple was traditionally 15 to 18. It's still near 30. That would put it below $100. And if we get that PE contraction, then that is, as people sell Apple, that's the last hedge fund hotel. There's going to be problems.
Yeah, you were talking about Apple at 100, I think, recently here. It's 136, almost 137 right now. So that's a pretty aggressive clipping if they do come for it at that level. But that would certainly, I think, spark a wee bit of panic if they do start coming for Apple. What do you think, listeners? They need to really start killing the darlings out there in the market for this sell-off really to take hold? Or do we need that? People were talking a couple of weeks ago. Do we need that pop in vol to really signal capitulation? Hit us up. Let us know. You guys already voted a lot in our poll. The answer was kind of yes, and kind of a light pop in vol up to around the 40 handle, which traditionally wouldn't be that light, but these days doesn't seem like much. Let's get on out to the futures side of the fence. We've had Matt McFarland, MIAX, on here many times talking about their new products and new projects they have going on in the world of Spikes futures, waiting for those ETPs to get listed and come online. That's really what they think is going to be the missing leg of that trifecta, the missing leg of that stool to really keep. Now you'll have the options and the futures and the ETFs to drive paper in both of the other two products. So once those go online, they expect a lot more futures volume coming down the pike. Looking at the VIX futures, when we commenced the show here, we saw the front portion of that curve was a little bit frosty, a little bit juicy. I'm sure if we react this right now, it'd be a little bit less. But coming into showtime, we had that July front future up about 0.75 of a point, and the AUG up almost a full point, about 0.85 out there. So a little bit of juice there in that front portion of the futures curve. Not quite backward yet, but looking a little bit juicier. Again, I'm sure if we reran it right now, it would look a little bit lighter. Mr. Meatball, anything catching your eye out there in the vol surface this week?
Yeah, it's been, we've seen VIX get over the curve and hang out under the curve, but the curve itself has maintained a pretty solid shape all week. It's been in a contango and stayed in a contango all week, and that has been kind of interesting. And again, I think points toward the fact there hasn't been any panic, hasn't been any real fear in this market, just movement. And that's what's holding up VIX, right? You can't really sell the VIX much lower than it is when we're seeing 2% drops, and a 27 VIX is pricing in about a 1.5% move a day. We've seen some of those moves way bigger than that intraday. And on a day-to-day basis, we've definitely been pretty darn close. In fact, realized vol in a lot of stocks, realized volatility is trading at above implied. And, VIX futures are kind of pointing to that implied may rally.
Yeah, they're pricing in about a 1 point premium between July and October, pretty much exactly 1 point when we kicked off the show. We had a 28.85 in the July future and a 29.85 in that Oct future. So looking reminiscent of what we were seeing back a couple of years ago, not quite as steep, but remember back in 2020, listeners, we were all talking at the beginning of the year about that crazy premium they were pricing in around the election in that October future. Then, of course, other things happened in 2020 that took our eye off the election ball. But yes, early on in the year, it seemed like that's a bit of an aberrant premium they're pricing in. They're still pricing in some juice here for the midterms, about a point, and then it comes right back down again to 28.85 again by December. So we go up a point from July to October, then back down a point through December. So a nice little blip there right around the midterms. Mr. Henry, what are your thoughts on what you're seeing out there in the world of the VIX futures this week, sir?
The same. I mean, it's interesting. Yeah, we've pulled back from the true fear, and I think that there's, I don't know. It's kind of like we've gotten used to this situation where rates are going to go up several percent in the next 6 months or so, and there's just bad headlines for multiple reasons out there, but the market's kind of, I think like Mark said, when we're seeing 2% moves, then the 30 VIX is about right. And what's interesting is like the last few days we haven't had those 2% moves, right? So we had 1% or even less. We had a couple days we barely, market was almost flat, and that's interesting. That puts some real pressure on VIX futures when you have a day where we close almost unchanged, but those futures are pricing in a solid 2% a day almost. So we'll be watching it, but it's kind of like every time we get kind of a shock or a scary period like this, everybody tries to figure out if it's different this time. But we go into contango, everybody freaks out, and then we go into backwardation. Things are scary, and then it doesn't last that long. I think it's interesting now, right? We're seeing a pretty prolonged period of VIX, in the 30 zone. So that's a little different. A lot of the other charts you'll see out there, it's like, okay, how quickly did we go back to a 17 or 18 or 19 VIX after a shock? And this isn't that kind of a situation, right? Everybody knows that they're watching the Fed for the next year, and how the economic numbers come in is people are going to be a little bit more scared in general, just kind of bracing for bad surprises here and there. So, I think things are going to kind of stay here. I would kind of expect the futures term structure to get more flat-ish than stay, super contango. I mean, you also have the long weekend type of effect, kind of hitting the front end vol and summer.
Yes, that double whammy of summer and a long holiday weekend also being felt on the volatility options front. Not a lot of paper going up in spikes options right now. Still seeing the July pars, the 100s, are the dominant force out there in the OI and spikes options, which always brings a smile to my face. In terms of VIX options, kind of the same deal. Not a heck of a lot at all going up out there today, which explains why the ADV has ticked down since our last show 2 weeks ago. So going back a couple of weeks now, we're down to 475,000. That's down 9,000 from where it was 2 weeks ago. When I start breaking down the numbers for this week, you're going to see why we have been trending lower. And today is no exception. When we started the show, there were 207,000 contracts on the tape in VIX. I re-racked it just now, just in case anything had happened. We're up to 210,000. So a whopping 3,000 contracts have traded over the course of the last half an hour. Just a frame of reference, usually when we're doing this on a decently active day, we could easily see 100,000+ contracts go up in that time frame, if not more. And instead, we got a whopping 3 today. So a whole heck of a lot of nothing. Doesn't seem like we're going to make that ADV again today. We'll break down the numbers for this week in a second. First, let me break down the top positions, such as they are out there in VIX options land right now. Cost you 127,000 contracts to break into the top 10 right now. That gets you to the July 22 puts. By the way, the top 10 positions, 60-40 calls over puts, so down slightly from where it was 2 weeks ago. We were leaning harder to the calls, then 70-30. Right now it's 60-40. So it's getting close to a pick'em again out there. So number 10, $127 of the July 22 puts, the first of 4 puts in our top 10. Number 9, 136,000 of the AUG 75 calls. Again, that 75 strike. Someone has discovered that strike and they just love it. You'll see as we go along. There's more of it here, listeners. Number 8, 142,000 of these SEP 75s. Number 7, now we have a little put strip here. Number 7, $1.46 of the July 24 puts. Number 6, 149,000 of the July 20 puts. Number 5, $1.53 of the July 25 puts. Then the rest of it is all calls all the time. Number 4, 156,000 of the July 35s. One of the few, dare I say it, relevant call strikes, kind of the only one in our top 10 this week. And 35, that's still kind of up there. Number 3, 175,000 of the July 60s. Number 2, here we go, 217,000 of the July 30s. So that's a little better. And then number 1, with about the same size bullet it's had for a bit, it's the OX 75s, 349,000 contracts on the tape. Remember, they were 250 not that long ago, and they hung out there for a while. They have obviously piled on more and then kind of been hanging out around this 350 level for a little while out here. So not a ton to unpack, but some stuff on the tape this week. Let me go on the horn really quickly and just break down a kind of quiet week. Then I'll get each of your thoughts on what we're seeing out there, such as it is this week. Today, like I said, 210,000 contracts on the tape. The most active contract today, 15,000 of the July 45s. That tells you what a light day it is when 15,000 is the most active contract in VIX land. You know, that's kind of nothing. Followed by almost 14,000 of the NOV 80s. You know, there's got to be a ridiculous strike in there somewhere. Today, it's the NOV 80s, 14,000 of those. Number 3, 12,000 of the July 25 puts. Number 4, 11,000 of the SEP 75s. Back to those. And if you need more 75s in your life, another 10,000 of the OX 75s going up today. Thursday, we had the busiest day of the week, 839,000. It seemed like we were on pace to maybe hit 1 million there ever so briefly. We were flirting with it. I thought maybe on the odd block and on the option block yesterday, maybe we would hit that, but we did not. 839,000. This is more like VIX here. The big dog yesterday, 145,000 of the NOV 80s yet again. Followed by 119,000 of the OX 75s. Is he putting more on the OX 75s, or is he gonna add some 80s, roll to the 80s perhaps? The OX 75s are pretty much our size position out there. It looks like he was adding yesterday. And then we have 79,000 of the AUG 23 puts, 76,000 of the AUG double calls, aka the 55s, and rounding out the top 5 yesterday, 38,000 of the July 25 puts. That bottom of the top 5 yesterday is going to eclipse pretty much anything else we talk about here for the rest of the week, so we'll go quickly. Wednesday, an anemic 209,000 contracts. So we've already exceeded that today, so I guess that's saying something. Wednesday was a whole lot of nothing. The big dog on Wednesday, the OX 40s, 22,000 of those, followed by 22,000 of the OX 60s. Looks like a bit of a vertical going up on Wednesday. And then we'll just skip out on the rest. Not a heck of a lot. Tuesday, 339,000, so a little bit more respectable. The big dog on Tuesday, 20,000 of the July 30s and 19,000 of the SEP 30s. So maybe a bit of a roll there. Monday, 311,000 contracts. The big dog on Monday. The July 35s doing 19,000 contracts, followed by the July 65s. There we go again. 14,600 of those, then 11,000 of the July 25 puts. So most of this week, with the exception of Thursday, listeners, a whole lot of nothing on the tape. Mr. Henry, I guess we'll start with you. You are watching the flow day in, day out. First off, we haven't had you on the show in a while. I want to get your thoughts on this proliferation of, shall we say, exaggerated upside in VIX. We have the 75s, we have the 80s, we have the pars, we have the 110s, the 120s. You name an out-of-the-money call strike, and it's doing size these days. So I'm curious your thoughts on that trend, if you've noticed it, if you have any insights there. And then B, anything else lighting up your tape in an otherwise quiet week, sir?
Well, I agree. If we'd done the show yesterday, there'd be much bigger numbers to play with.
Yeah.
Like I said, the weekend has started, I think, for the VIX traders. And actually, I was in Chicago yesterday, and most of this weekend got a tour of the new trading floor. So I got to look down into the brand new VIX pit, and it was kind of, even though we had that 100,000 lot print, it was actually kind of quiet. So the upside strikes, I do watch the flow. I have not had the luxury of actually talking to any of the traders on the other end of those trades. My guess is that, there's, in a lot of the meetings I've had in the last 6 months, there's a lot more quantitative, the trend is towards quantitative trades that, with heavy duty back testing on them. and away from kind of some of the spec stuff or the old fashioned, the good old trades where, somebody kind of puts on a trade because they want to. So my guess is that these upside strikes are back testing well. I honestly, the 100,000 lot yesterday was a closer. I don't know what the strategy is, but my guess is that it either looks good in on the back testing for the desks that are putting it on, or we always talk about how far upside VIX calls are basically the same as SPX disaster puts, right? Those are going to explode in the worst case situation, and if somebody likes the risk reward there better than they do on the in the equivalent little tiny out of the money put, then that's what they're going to trade. So I don't know the reason they're trading it, but yes, there's obviously been a lot more action up there. And it's interesting because it's not so much in the form of those 1x3s and things we used to see. So still working on it.
Yeah, vol paper, VIX paper tends to come in trends, and there's definitely trends. Like you mentioned, we have seen periods where it's all 1x2s all the time, and it's all these other types of trades. And it seems like in the last 6 or so months, all these funds have awakened to the majesty of far out of the money calls in VIX, and they're just loading up on them just to hell and high water here. Just tons of these far out of the money. We used to think a 45, 50 call was out of the money. They're doing double that and then some out there these days. And you're right, they do play a kind of a bit of an analogous role to these far out of the money S&P crash puts, but maybe a little bit better payouts in some of those environments. VIX can explode, and you don't need to get to 110, listeners, to have your 110 calls looking much better than they were at, let's say, 25. Mr. Meatball, what are your thoughts? We talked about this before, this proliferation of upside. We did hear some rumors last week. We weren't able to do the show last week. We did hear some rumors, maybe 50 Cent starting to reemerge. What are your thoughts on that? And then also, what are your thoughts on what it was a pretty much anemic week outside of Thursday, sir?
Yeah, it was a grind. It was very anemic other than some huge spreads. I thought it was interesting that, a trader bought those puts. If you look at the way this trader positioned themselves, they're positioning for maybe a quieter July and August and maybe some fireworks coming in the fall rather than, summertime, despite the fact August has been a bit of a disaster for markets over the life of August. Pretty interesting stuff. Probably, it's some sort of credit fund. It's got to be. I don't know exactly who or what. I doubt it's 50 Cent, but definitely sets up for some sort of, they definitely have been repositioning themselves and moving out the duration of this hedge position. So just something to keep an eye on.
Intriguing stuff. Let's see what's intriguing out here in the land of our newest additions to the vol space, aka SVIX and UVIX. SVIX, of course, the inverse vol product. UVIX, easier for me to say. UVIX, the 2x levered VIX product out there. And SVIX, when we came into the show at around a 1040, up about 3/4 of a point. Makes sense. We're starting to see VIX come off a little bit now. Not a lot of paper, which has kind of been the problem bedeviling SVIX for a while. Only 135 contracts on the tape. That said, the ADV has ticked up to 681. It's up about 100 contracts from where it was this time a couple of weeks ago, but still not even 700 contracts. So not a lot to parse. I'll just look really quickly at the top SVIX position. We've got 800 of the 12 calls out there right now in July. That's the big dog out there. So read into it what you will. Henry, have you been watching? They've got a lot of headlines when it first launched, this inverse VIX product. Obviously, everyone was equating it to XIV and all the issues that happened there. We haven't really had you on since these products have launched. So I'm curious, what are your thoughts on them? Do you think the SVIX and UVIX, its counterpart, are they bringing something to the table? And then also, what are your thoughts on the fact that SVIX still not lighting up the tape from a volume perspective?
No, these are taking a while to kind of gain some popularity. I'm a huge fan of a growing ecosystem, of products, meaning things that people are going to trade and arb against each other and hand, and kind of try to take advantage of relationships. I think that's why the crypto universe is really interesting, right? Because you have ETFs, futures, and you got spot, and you got options. the VIX related products are the same. So, I think that there's, but I think that, if we see that, overall, if VIX option volume is quiet like today, you don't quite have enough for things to play into each other. I think it will gain steam. Maybe right now people are just kind of taking a while. I would also imagine, the smaller traders who probably are kind of early adopters of these kinds of trades, they might not have had the best spring, and so I think and we see it in the volume out there that people are not doing as much as they were. So I do have, when you have time, if we save a little time for the end, I ran some stats since we're right at the middle of the year, and I can give you a little update on market-wide kind of volume.
Yes, we are at a good spot. So we'll get to that in a couple seconds. I like that. Hold on to that for a second. Cool. We'll pay off the rest of our crazy vol products here. Let's first go out to UVIX. The 2X levered product has been doing more paper. That continues to be the case today. 1,310 contracts on the tape, even though the ADV is almost literally unchanged. I think it's one contract different from what it was 2 weeks ago. 33.64 out there. UVIX, by the way, 17.25 when we kicked off the show, up nearly a full point, about 0.8 of a point out there. So obviously doing a little bit more paper. Let's do a quick top 5 in UVIX, and we'll get the Meatball's thoughts on all this madness. Number 5, 1,000 of the Jan 15 puts, followed by number 4, 1,000 as well of the Sep 15 puts. So maybe a bit of a calendar there. Number 3, 2,001 of the Dece 18 puts. Number 2, 2,300 of the July 27 calls. And number 1 with a decent sized bullet, about 3,800. So a little more than the ADV of the July 19 calls, which, looking where we are right now, we could play with that by the time we hit the July expiration. In terms of action today, looks like the big dog, looks like a 1,500 lot of the July 16-17 put spread went up, but that's driving a lot of the paper. Obviously, that's 3,000 contracts right there, so it's a good chunk of the paper out here. But intriguing stuff out here nonetheless. Mr. Meatball, what are your thoughts here on SVIX continuing to struggle to attract a lot of attention while UVIX doing some decent paper?
Yeah, UVIX has really taken off in terms of overall volume. It's doing 3 million shares a day now, slowly stealing volume from UVXY. SVIX, I think there's a lot of people burned, and frankly, with the VIX progressively, constantly in the 20s, in the high 20s, low 30s, it's going to be very hard for a product like SVIX to take off. When that thing starts going up consistently, at that point, you're going to probably see some traders very interested in playing with SVIX.
I thought those volume numbers sounded weird for UVIX listeners because that 1,500 lot went up right as we were speaking pretty much. So that's why the total now for today for UVIX is actually 4,225 contracts. That makes more sense than the 1,300 when you have 3,000 contracts going up in a vertical by itself out there. So intriguing stuff, a little bit paper hitting the tape. But speaking of a little bit, that's pretty much what you can call VXX right now as well. It was at a 23 when we kicked off the show, down about 1.6 points. Coming into today, we got 43,000 contracts on the tape. That's not a heck of a lot compared to the ADV, which is 69,000. That in and itself is down 5,000 from 2 weeks ago. But it's also a pale shadow of what VXX used to do before all the Barclays madness started happening. This product used to rival VIX, used to eclipse VIX some days from an options perspective. Those tail wagging the dog days. These days, kind of a far cry from that. There is still some paper out there in terms of the big dog out there is 109,000 of the AUG 16 puts. The top 10, by the way, all puts all the time. Nobody wants to touch a call on this thing for, I think, understandable reasons. Number 2, we got 43,000 of the July 20 puts. Number 3, 41,000 of the July 19 puts. Number 4, 40,000 of the July 18 puts. And rounding out the top 5 in VXX, about 40,000 of the July 17 puts. In terms of today's paper, nothing big really. About 3,000 of the July 20 puts, July 23 puts, and about 2,200 of the July 30 calls are the big dogs out there today. Mr. Henry, what are your thoughts on the fall from grace that we've seen out there in VXX and the fact that this product that once used to rival VIX from a flow perspective is now kind of a pale shadow of its former self?
Well, I mean, I think that, there's less to go around. And so, all these products are connected. Obviously the VIX futures volume, had a big change after the Volmageddon, and a lot of people I think probably gave up on that product suite, probably for the rest of their life. And so you're waiting for new entrants, and like I said, there's a lot of quantitative. It's the growth on the institutional side has been in these quantitative investment strategies, and not so much in the high touch or kind of concentrated positions or just big trades. That's not what we're seeing as much anymore. So I think it takes time for kind of these new entrants to pick products that they want to trade, and then as well, like liquidity kind of begets liquidity and flow and volume, and so once things start to get thin, there's some momentum there to keep it that way.
Let's head on out to UVXY, see what kind of momentum we have out there. A lot of folks, including the meatball, kind of waiting for maybe some of those new products to start nipping at the heels of UVXY. It doesn't seem like it's happening yet, even though UVXY not exactly lighting up the tape today either. 14 3/4 when we kicked off the show. It's up a little over half a point, about 0.6 of a point from where it was 2 weeks ago. The ADV is right about where it was 2 weeks ago, 266. That's down about 3,000, so not much at all. Today, we're seeing about 120,000 contracts on the tape, so kind of light, as you would expect. In terms of positions out there, it is mostly puts out here with a few calls percolating in the top 10. Really quick, let's do a top 5, so we got to get rolling here. I'm going to get the Flowmaster's mid-year update on here as well. 14,000 of the July expiring on the first 14 puts, followed by 11,000 of the July 15 calls. 11,000 as well for number 3 of the July 15 puts. Number 4, 11,000 as well. Got a bit of a tie here for 2 through 4 of the July 10 puts. Number 5, 10,000 of the July 16 calls expiring on the first in the weeklies. Mr. Meatball, have you been playing around in UVXY these days, and anything catching your eye out there?
Yeah, heading into this week, I thought, we're in a contango. It's traditionally a low vol week. I thought, maybe it could get a little bit of a rebound and, or a little bit of a tanking, and that did not happen. It's basically slightly up on the week, and option volumes continue to be pretty robust there. And until we see some real liquidity in VIX itself, or in UVIX itself, in the options, UVXY is going to be the place where people go to trade options.
All right, listeners, now it is that time. We have a rare treat. Our rescheduling from last week actually works out, because now we have the perfect time to have the Flowmaster join us for a nice mid-year update, a mid-year look back on the world of options. Obviously, June coming to an end, July 1st now, looking back at the first half of the year. Mr. Flowmaster, sir, what were some of the trends and highlights that caught your eye so far in 2022?
Sure. So I ran the numbers right before, and it is great that we have end of June right behind us. So industry volume is just topping 5 billion contracts, which is an average daily volume of just over 40.3 million contracts a day. And that's up 6% on an average daily volume market-wide over the year before, which was a record, on top of the year before that, which was a record. So, so 6% growth is what we're looking at market-wide. But what's interesting when you kind of look under the hood is the between ETF options, single stock options, and index options, how that's shaking out. The single stock option volume, average daily volume, is about 22.1 million contracts a day. That's down 12% from last year. So now it had exploded. It went from about 16 million to 25 million from 2021. So that's a decrease. So that we're seeing less of that. That is really I believe it's directly connected to the fact that markets pulled back, and so much of that retail single stock flow has disappeared, because those traders, at least the ones that were just kind of blindly buying calls into a bull market, have obviously have lost their money, or at least some of their money. The growth, though, is if you look at the the index option volume now is running about 2.5 million contracts a day. So that's up 26% over the year before. That's the highest. I don't think we're running at all-time records, because if you go back around 2012, I think it's higher, but it's the highest in the last 5 years, which is what I grabbed. So 26% increase in index activity. And that is coming from, like I said, the fact that we've kind of swung back into some traditional hedging, has woken up. And then also a lot of new stuff going on, right? Like, SIBO came up with the curb trading session, which means basically we don't close it at 4:15 anymore. We pretty much go straight till 5 o'clock. And then you have the global trading hours, which start at, I believe, 9 p.m. New York time and run all the way until the next morning. So, the SIBO is moving to this 24/5 index trading, and we're kind of almost there. So that obviously helps volume as well. And ETF volume is up 44% from last year. So at least on an average daily volume. And that is, that's kind of coming from the fact that you see a lot of rotation, right? It's a few weeks ago, what everybody was talking about was people dumping out of the COVID stocks and into the value stocks. ETFs are a nice, efficient way to do that really quickly. So that to me, it's great. I predicted 10 billion contracts, and it looks like we're tracking on that. One thing that I thought was interesting, and I know this is volatility views, but I will mention that the splits, these 20-for-1 splits, are not quite doing much for volume, which we knew we weren't going to get a ginormous jump, but I was a little disappointed, that we volume option volume doubled or so. But on a 20-for-1 split, you kind of hope maybe you get 10x for at least a month or two. But
we are seeing Amazon topping the volume list a lot now, though. So that working at least there locally for Amazon.
Yeah, but not to the multiplier that you kind of hope.
Any other highlights, sir, that are resonating with you?
I'm keeping an eye on trading an occasional nanos option. They still have some challenges in the market quality. We're working on that, but I'm actually, next time I go to Chicago at the end of this month will be to tape some nanos videos. So, I'm gonna keep playing around with those. I think they're an incredible learning tool. When you can go trade a $4 option, then it's actually a $4 option. Instead of buying a cappuccino, you can be like, you know what, I'm gonna buy a call and kind of see how the afternoon goes. And they're fun. They really are fun to trade.
Well, I'm glad to see that you are a fan of your own products, sir. That's always a good sign. That's the first step. If you hate your own thing, then it would be no fun. So Henry accounting for all the flow out there in the nanos.
Not all
right
of it.
Now.
Just some.
Have you guys experimented with the nanos yet, listeners? Hit us up. I know they're still working on some volume out there, but have you dipped your toes even doing a one lot, as Henry was saying? Skip the cappuccino, pick up a one lot. Have any of you experimented with those? I'd be curious to hear your stories if that's the case. Hit us up. Let us know. Looking really quickly, we are at pretty much beyond the tail end of earnings season right now. So from an earnings vol perspective, everyone's kind of waiting for the next season to kick off to really take us into perhaps high gear again. That said, there were still some names popping off this week. Nike on Monday, Bed Bath & Beyond, General Mills on Wednesday, Walgreens Boots Alliance, one of my favorite tickers, as well as Micron out there yesterday. If you want highlights from all that stuff, we do have the updated earnings move results and earnings season reports from our buddies over there at Oretz. Available for you over there on the website, theoptionsinsider.com. Click on the options news and articles tab for you guys to sink your teeth into that. Also, some interesting new single name reports. I do believe they dove deep into Micron and Walgreens Boots Alliance this week. So intriguing stuff. If you want to see a lot more data than we get into just in these simple reports, it's a lot, really. It's really fascinating stuff. Then check out those individual deep dives. We have those up on the website for you as well. We've also tweeted them out. So if you want to find links to those, that's an easy place to go over there at Options. As we keep on rolling, it is time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into The Crystal Ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we struggle to determine what the vol gods hold in store for us for the coming week. Obviously, we were off last week, so we didn't have a chance to pay off our guesses from last week. We ran the numbers right before showtime. For last show, I was at a 31.25. Mr. Meatball was at a 27.72, and Brian Overby, who joined us 2 weeks ago, was at a 33.01. So he was feeling a lot more juice. I was feeling a wee bit more. Mr. Meatball feeling around where we were, maybe a little bit less at the time. And that actually looked all right. Spikes ended up going out actually exactly at the end of our showtime at 27.36. So he was close to half a point away, within a half a point. So not quite within our margin of victory, but not bad. Mr. Meatball. VIX was at 27.25. So you're about exactly half a point away there. You're the closest. The rest of us, we're not exactly lighting it up this time for last week. So that means, Mr. Mark, I will give you the pride of place. Do you want to go first this week, or do you perhaps want to pick somebody else to go first?
I will yield to the flow master and you, my friend, and I'll take up the rear.
As you like to do, but I won't go any farther with that joke. Mr. It's a family show. You made it too easy for him.
I did. That is on me.
That is definitely on you. Mr. Flow Master, sir, you get the dubious honor of going first. What are you feeling for vol, VIX or spikes, whatever you want to pick this time next week?
I'll pick VIX, and I will pick 28.8.
Interesting. By the way, I should pay off where we are exactly right now as well, so folks have some frame of reference. Coming into the end of the show, listeners, we're at about a 27.10 in spikes. So yeah, we're both spikes and VIX at a little bit north of the 27 level, listeners, which means Henry going a little bit higher this time next week. I don't fault that. I've been on kind of mostly the upside tip for this year. It's worked out. I had a few bullseyes in my back pocket last week, not so much. I'm going to say, 27 and change right now. Coming off of the holiday, we're probably going to get some juice back, probably. How much? And then what will we have happen earlier in the week that will maybe lift us into the end of the week? I'm going to say we're going to be not that far from where we are right now. I'm going to say 27 double for this time next week. All right, Mr. Meatball, you got about 1.33 roughly between myself and Mr. Henry. You going to go there, or are you going to go somewhere wildly outside of it?
I'm sorry. What was your exact guess?
I was 27 double. Mr. Henry was at 28.80.
So you stole my pick from last week. I see how, or from 2 weeks ago.
You were 27.72. You were nowhere close.
Okay. Oh yeah, from 27 double. Not close at all.
Not even in the same ballpark.
Not in the same ballpark. All right. I'm going to say 26.62.
Oh, look at you. Actually come up with a good one as opposed to throwing some nonsense out there because it sounds good.
Well, no, it's a palindrome. Don't worry.
That's true. It is. You do like your palindromic numbers there. 26.62 for the Meatball listeners. That is your vol market for this time next week. All right, everybody. That music means we unfortunately have come to the end for another journey through the world of volatility. I want to thank our guest, the Flow Master, for joining us, giving us a mid-year recap. Before we go, Mr. Flow Master, anything else up your sleeve, or maybe some intriguing new additions you guys are adding over there on the Trade Alert side you want to make people aware of? Now is the time, sir. The floor is yours.
We continue to put some very cool work into flex option alerts, and we're hoping to have Greeks and theoretical values on flex index trades very soon, which will be pretty cool. So that's what I'm focused on, and I wish everybody a nice, safe, long weekend.
There you go. Stealing my line. Stay safe out there. Mr. Meatball, what's going on in the world of the pit, sir?
Yeah, we are doing a special on our mentoring program. So if you want to learn from how to trade like a professional in a retail environment, then you need me and Andrew. Go to optionpit.com. You can find out all about it. And, of course, read our VIX blog that we put out every day. It will absolutely help you become a better trader and navigate this market.
There you go. Check them out, optionpit.com. For all of you on the on-demand side, that will conclude our broadcast week. I want to thank you for joining us. Reminding you, it is a long holiday weekend, so no shows on Monday. Back again later on in the week with our usual allotment of programs, all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX Volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.